Hey guys, what's up? I'm Erin and welcome back to the channel. How important is your credit score? Well, that depends. Are you in the market for a loan? Do you need a mortgage, or are you looking at a new car? Or maybe you're looking to rent a place, or in some cases even get a job promotion, because your credit score can play a factor there too. So odds are if someone's about to check your credit score, then it's probably pretty important, and you're going to be aiming to have as high a score as possible, and you're going to be aiming to get a gold star. However, if you live in a completely paid off home and anytime you buy a car, you buy it in cash, well, then maybe your credit score isn't as important. Remember, finance is personal. But if you're someone who's obsessed with personal finance and credit card points, and as a hobby, color codes your own personally created budget and net worth spreadsheets, you probably care about your credit score too. Quick question, are you someone who's personally created and maintains your own personal financial spreadsheets? Let me know in the comments down below. I just want to let you know, here's my comment, I'm right there with you. The FICO credit score generally ranges from 300 to 850. Typically speaking, once you hit the very good category, you will qualify for the best interest rates for loans. But I know not everyone wants to stop there. Some people want to strive for that perfect score of 850 or at least get into the 800s. As for how the typical American stands, well, credit scores are kind of like wine. They tend to get a little bit better with age. The typical consumer 57 and under has a credit score that classifies as good, while the typical consumer over the age of 57 has a very good score. And just in case you're curious, Business Insider created a bunch of tables about credit scores, average by generation and average by state. If you're interested in checking out some of the others, I will link it down below. There are 5 categories that make up your total credit score, those being payment history, amounts owed, or how much of your available credit you're actually using, new credit, length of credit history, and credit types. As you can see, each of these categories have varying levels of importance. Certain categories you can influence pretty quickly. Other categories simply take some more time, but there are things you can do that can increase your credit score in just the next 30 days. So if you're looking to boost your credit score, here's some things you can do. Run your credit report. Okay, running your credit report isn't going to increase your score, but it's a vital step in the process. Your credit report will show you how you're handling credit and how you've handled it in the past. It'll tell positive things as well as negative things. If you have things that are hurting your credit score, they're going to show up here. Maybe you have a few dings, like a few late payments, but here's the thing to note. Credit reports are not always 100% accurate. Shocker, I know, right? Well, apparently 34% of credit reports have at least one error. But get this, only a third of Americans are regularly checking their credit reports. While worth noting, while traditionally you're only entitled to one free credit report from the big 3 every single year, Equifax, Experian, and TransUnion, through the end of this year, 2022, you can get a free credit report every single week from annualcreditreport.com. So that means you literally have no excuse. It's 100% free, so you might as well check it and make sure it's right. And if it's not, well, then you have some work to do. If you see any errors, dispute them. If you're able to point out these errors and get them removed, you can immediately boost your credit score. Also, check for items that should have been removed but haven't been. Do you have items that you've disputed in the past? They said they would remove, but they're still there? Well, you still have to work on them if they're still showing up. What about medical debts? Any medical debts under $500 can no longer be reported to the credit agencies. So if you see any there, get them removed. What about a late payment? If a late payment has been on your credit report for 7 years, it has to be removed. But here's the thing, they aren't always promptly removed. So if you see something there, get it taken off. Getting these items removed can easily boost your credit score. Your credit utilization, or the amount of credit available to you that you're actually using, accounts for 30% of your credit score. And you want to keep your credit utilization low in order to keep your score high. They say the general metric is to say that credit utilization should not exceed 30% of the credit that's available to you. But if you do a little digging, you find that those with the highest credit scores actually keep their usage less than 7%. So what can you do to get your usage down? Well, it doesn't necessarily mean spending less. You can call your credit card issuer, and if you're responsible, if you've paid your bills on time and you've been with them for a while, they're usually more than happy to do this. And it's usually done rather quickly, but you have to keep in mind of what 7% really looks like. If you spend, say, $2,000 on your credit card every single month, That's a credit limit of about $28,500. If you spend $3,000 per month, that's a credit limit of almost $43,000. Now, if increasing your credit limit is just going to make you spend more, don't do this. But if you're going to keep your spending at about the same level, well, this can be really beneficial because it can impact your score greatly, being that credit utilization is such a big component of the credit score. Or you have the option of strategically paying off your credit card. Let's say for one reason or another, you don't want to have a credit limit that is $40,000 or $50,000, but you still want to boost your credit score and take advantage of a better utilization rate. Well, you can simply pay off your card more frequently. Rather than waiting for the end of the month or for the billing statement to close, you could simply pay off your card every single week. This should allow you to pay off your balance before it gets too large, or anytime you go to put a bigger purchase on your card, you can immediately pay it off. That way you keep the balance that is reported to these credit agencies on the lower side, and that way your credit utilization will constantly look low. Again, this can be pretty influential on your credit score, just like raising your credit limit, but this one does require a little bit more commitment on your end as you're making payments more frequently. Personally, I do both. I pay my credit cards off every 2 weeks, and I also make sure to keep high credit limits. And currently my credit score is sitting at 807, and I am perfectly happy with that. If you have a limited credit history, there are some ways you can address that area of your score. If your parent or significant other has a lengthy credit history and a good record of making payments on time, perhaps they would be willing to let you become an authorized user on their account. If they do that, that account gets added to your credit history, and that lengthens your payment history as well as your credit history, if that account is older than your other ones. This process is known as credit piggybacking. It's when you're added to another person's credit card account with the intention of establishing credit or increasing your credit score. It's important to note that the account holder doesn't actually have to give you the account number or hand over a credit card for you to use. You could just be a silent authorized user. But this approach isn't really without risk either. You do have to give your personal information over to the account holder, and then also consider that as an authorized user, you do have every right to use that account if you want to. So it's really important that you have good financial habits, because if you're carrying bad financial habits and you do use that account, you could actually hurt the credit score of the person who owns the account. The impact on your credit score is going to be greatest if you have a poor credit score or if you're a credit newbie, but the impact can be quick. A lot of parents do use this to help lengthen their kids' credit history, but this action in and of itself doesn't teach good financial habits. So you want to make sure, even if you make someone an authorized user, you want to make sure that they develop good financial habits so they can keep their credit score high. Use Experian Boost. It's free. You literally create an account with Experian and hit the Boost button, and Experian will scan your checking accounts for on-time payments to utility companies, subscription services, and even rent payments. These factors don't traditionally factor into the credit score, so adding them in can give you a little boost as long as you've been on time and regular with them. The people most likely to notice the biggest boost are those with limited credit histories, but the effect is immediate and the service is free, so why not do it? Making on-time payments is the most important thing you can do when it comes to your credit score. Your payment history is the largest component of your score, and rightfully so. If you lend someone money, you want to know that they're going to pay you back, and they're going to pay you back on time. This is exactly what lenders want to know as well. So the best thing you can do is to set all of your accounts and your payments to auto pay. That way you are never late. And if you ever find yourself in a position where you are late, it's best to get that account paid and back to current as quickly as possible. Generally, there is a 30-day grace period where lenders won't report to the credit agencies that you've missed a payment, but that's not true of all lenders. And just so you know, how late an account is matters when it comes to credit reporting. If an account is reported as 30 days late, that hurts your score less than an account that is reported 60 days late, and the further out you get, the more it hurts your score. And the number of accounts you have reported as past due, that matters too, because if you only have one late payment from one account, that hurts your score less than having, say, 2 accounts reported as being late. So the moral of the story is stay current with your accounts, and if you aren't current, get current as quickly as you possibly can. And if you once had an account that did have a late payment, but you've already paid it up to current, pick up the phone, call your lender, call the credit agencies, and ask them to get it removed. They're under no obligation to remove it, but it doesn't hurt to ask. It doesn't mean that they absolutely won't remove it. And when dealing with customer service, it helps to remember the phrase, you catch more flies with honey. Now, I try to go through life with the attitude of kindness. I try to assume that everyone has their own hardships that they're dealing with, so why not be extra kind? But when it comes to customer service, I step it up a notch. I try to be so nice to them because the way I see it, they spend so much of their day getting yelled at by consumers who are already unhappy. So if I can come in and make their day a little bit better, they're more likely to work with me. And oftentimes I find that they have suggestions for me on how to make the situation even better, and they are willing to help. So kindness matters. Consider your credit mix. Now, I hesitated to add this one, but if you have a variety of different credit types that you are handling very well, you are likely to have a better credit score than if you simply have one credit type that you're handling well, like say a credit card. Up until last year, the only debt I had ever dealt with was credit cards. But last year we bought our first home, and with it came a mortgage. And guess what happened after we bought our home? My credit score got a boost by 10 to 15 points, which personally I think is a little bit ridiculous because now I have more debt. But it does show lenders that I am better able to handle different types of debt. Now, this is not me saying that I think you should go out and take on more debt in an attempt to boost your credit score. I was able to have a credit score around 790 just by having a credit card that I used every single month and paid it off in full at the end of every single month. So I don't think you need more debt types, but having more debt types can have a positive impact on your score. So what are you doing to work on your credit score? Are you working on building your credit score right now? Let me know in the comments down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing, or if you know of someone who might get something out of this type of content, please consider sharing. I hope you have a great day. Bye. Your credit score. Have you personally created, and do you personally budget and personal in your credit or on that your credit score to know the process, dispute them, remove, but have to be removed from your debt. I don't like that at all. Report to the crit, and you've been with them for you to use, repeatedly reported. Those with the, you have to still take care of it. You have to still hound them a little bit by having a better utilization. Actually reported to. Once they factor that in, it's to make them. It shows both positive, or just like crazy.